Hi, welcome to this video day, which is all about how to trade Forex for beginners. Now, in terms of this video, I'm joined by professional Norwegian Forex trader Roy Sivertsen of Norse FX, and he does a fantastic summary on how he achieved success. When you watch the interview, you will see how you can achieve success as well. In fact, anyone can achieve success at Forex trading if they want to and if they do the right things, which most Forex traders won't do. Now, after I've done the interview with Roy, which is just coming up, I'm also going to give you 10 tips, okay, or steps that if you follow them will lead you to Forex trading success. Now we're just going to go and join Roy. And just before we do, before I forget, does some fantastic analysis on the net. So I've done a link to his YouTube channel beneath this one. And you can also join our free mailing list for lots of tips on the best strategies and the best way to win at Forex trading. So right, let's go and chat to Roy. Just actually thought we'd talk a little bit about your trading experience, how you trade and so forth, yeah?
Yeah,
And just really, I was going to ask you first of all, how did you get started in trading and trading Forex?
everything started with a trading stock trading competition in Norway. That sparked my interest. I had a horrible experience with the competition itself, lost a lot of the fake money. Eventually got into penny stocks. We had a big marijuana boom that I ended up buying the top in. And then I had a friend who was trading Forex, and he said, the only thing you have to do to make money in Forex is to short the Euro USD. And this was back in 2015, and the Euro was heavily in a downtrend. And the day I funded my account and went short the Euro USD, that was the bottom print itself. So
Okay.
baptized by fire.
Okay, so the first experience was not such a good one.
No, and the second one was rather horrible itself.
In terms of obviously you came in, you probably didn't know too much about how to trade Forex and you just did that on the recommendation of your friend, yeah?
Yeah, that's correct.
And obviously today you're trading, successfully and so forth. What did you do to learn Forex trading and get things right, so to speak?
The first thing I did was to take a lot of courses, attend as many seminars and webinars that I could, and really spent a lot of time with the markets because they say that you need 10,000 hours to be a master of any type of profession or sport. And right now, I believe I'm well above the 10,000 hour mark, and things are going good.
Okay. Now, in terms of you obviously when you trade the markets, can you just tell us a little bit about the way you like to trade?
I'm a both a trend trader and a counter trend trader. My best setup of them all is what I call a false breakout. So if we have an existing uptrend coming into a very high time frame support or resistance, if that breakout that happens fails, then I like to take my position after the failed breakout itself using price action and trigger candles like shooting stars, so big wick candles, and then I go from there.
Okay, so just wait for the breakout to occur. Then, as it comes back through the level, look to take a position effectively. Yeah.
Yeah, so if we get it close below the support or resistance, that is my trigger.
Okay. Now, in terms of time frames, what sort of time frames are you trading in?
I like to use the weekly for a high time frame analysis just to check if price is coming into a significant area of support or resistance. Then I use the 1 hour or the 4 hour as my trigger candle.
Okay, so you're really trying to key off the big weekly levels, see if they line up with the daily levels, and then
Yeah,
then time on the shorter term time frames. You don't do any short term trading at all within a day or anything like that.
no, I tried day trading a lot of times. The only times I day trade is when we have the NFP, but that's the only time I day trade. The rest is swing trading and position trading.
What's the average length of time you'd hold a swing trade for, or a position trade?
The normal holding time is between 3 days and 3 weeks.
Okay. Now, in terms of you using obviously price action to confirm your moves coming through levels and so forth, do you use any other indicators or tools?
I like to use the commitment of traders reports in confluence with the price action itself. So I look for the bigger institutions to be extremely heavy on one side. And then if I get my false breakouts, that is my trigger to take advantage of the COT report.
Okay, for those viewers who don't know the COT report, obviously you've got speculators and commercials who are the kind of the smart money hedgers. You're going with the hedgers, I take it, yeah?
Yeah, I go with the hedgers.
Yeah. Okay. In terms of when you're trading, most important thing, well, one of the most important things in trading, obviously money management.
Yeah,
How do you approach money management? What sort of risk do you take?
I use what I call a dynamic risk. So if I have a low conviction trade or a bad period in trading, I like to reduce my overall risk. So taking a trade with a 0.5% risk instead of 2%.
Okay.
And then when I'm on a hot streak or just feeling confident and I get good valid daily setups, then I go back to the normal risk.
Okay, so basically, when you're not doing so well, you're not so confident. It's 0.5% per trade. Is that correct?
Yeah, that's correct.
And then
Just to put a limit on the potential drawdown that I could be.
Okay, then you move up to let's say 2 or 4% when you're obviously in a better run or you're feeling really confident. Yeah.
Yeah, or even if I am in a very bad period and I get a setup on the weekly charts happening on a 4 hour and it's valid, then I have to go back and take the bigger size yet.
Okay.
Bigger size again, I mean.
Okay, so that's your risk per trade, so to speak. Well, what's the total risk on your account? So if everything goes wrong at once.
If I get a fire sale in my account, that is between 5 and 7%. I got 16% on the GBP flash crash a
Right.
few months ago, but that was an anomaly. So normally it's between 5 and 7 maximum risk.
Okay, so that's the maximum risk you take. Obviously, a lot of beginners watching this video might say that's a little bit small.
Yeah.
Which is one thing, yeah, I think beginners don't understand. You can actually make a lot of money by risking what you said, I think, 5 to 7%. I think that's plenty for most beginners. I think anyone coming in the markets, you probably agree, they're just over leveraged. That's one of the major reasons they get wiped.
Yeah, that's the number one reason, I believe. Just take a recent trade, for example. I was short on GBP CHF. I was shorted late last week, so around the 27th of January, I believe.
Yeah.
And hit take profit today, a 1 to 7 risk versus reward. So I made 14% in just a few days.
Yeah.
You don't get that kind of interest rate in the local bank. So
no, I agree with you. I think that you can actually make decent, very good profits, like just that example there, just by not risking too much. Now, in terms of psychology in Forex trading, obviously very important. How important do you consider it?
it's the most key element in trading because strategy and price action and your abilities to read the market is only a smaller part of the overall picture, and the psychology is the one that weighs the most because it doesn't matter how good or bad you are. If the psychology is off, everything fails.
In terms of psychology, what do you think, when you started, were the major problems you had with psychology? Which I'm sure most beginners will probably associate with what you're going to say, and me.
Uh, the thing that at least I struggled with in the beginning was the gambler's ruin. So when I took a loss, I immediately wanted to make it back in the same hour or the same day, and that led to me digging myself a very big hole in the end.
So,
And
so revenge trading and
yeah, revenge trading, adding to losers, and yeah, all of the bad stuff.
now, in terms of obviously, I think every beginner when they start will always try and get losses back too quickly. You dig yourself a bigger hole, but I think a problem a lot of forex traders have is running profits. Okay, because they're always
Yeah.
tempted to snatch them in early. You know, better to have a small profit than it get away. How do you deal with that?
I struggled a lot with that in the beginning, but after a while, it didn't make sense to take a full 2% loss when I only made 0.5% profit since I took early profit due to me being trading with scared money, basically. So I was afraid that the profit would run away, and I just took it. And then I watched the balloon fly away for the rest of the week and regretting and getting in at the worst possible time and taking another loss.
So, in terms of running profits, you just gave that example of a trade there. What sort of risk reward do you go for? I know obviously risk reward is subjective, but what are you looking to make against what you risk?
At least 2.5 times the risk. So if I risk 50 pips, I want to get at least 125 pips. And that you can make that in 2 days, since the average daily range is about 100 pips on the majors.
Okay, and in terms of when you're trading, do you actually trade with a set position size, or do you vary the position size? I.e., do you add to winning positions, or do you?
I start off with a static risk, so between 0.5 and 2%. And then when the trade goes in my favor, I like to add to a position instead of taking off partial profits.
Yeah.
So I really like to get in at the start of a trend and try to build myself a monster. In 2017, I had a few good trades where I managed to get fairly big and make some decent profits just by adding and staying patient.
What would have been your biggest profit in 2017 using that technique?
That was dollar yen in November. I got in at the highs themselves and I added, I think it was 9 or 11 shorts on a 350 pip move. And that move alone doubled the account. So
Okay.
that's pretty insane. I held for 3 weeks. The last week I did not sleep at all almost. It was madhouse.
But you had total conviction in that trade.
Yeah, high conviction trade since I had the COT and I had the false break above a monthly high and everything lined up. It was the perfect storm. And since I added so aggressively, so almost every other day, it was an extremely big fight between myself and my impulses, just not to take the profits too early.
And you're
So
moving obviously your stop loss to protect and so forth, yeah?
yeah, I had to move a lot of stops every time. So it was a lot of work in terms of management, but it kept me busy, and that's what I needed in that period, since
that,
it
that,
was
so
hardest trade I ever took.
so it's one of those hard things. It's sitting on a winner, isn't it? You know.
Yeah, it's much harder than sitting on a loser, and that comes back to the psychology again, and the mind plays tricks on us all the times.
Yeah, no, it's one of those things. That, running big winning trades is what makes the difference. I think a lot of beginners, obviously they're going to run losses when they start and all the rest of it. But I always think, holding profits is harder than taking losses. Yeah, because it's just a real battle then.
Yeah, I totally agree with you.
Now, in terms of, it, let's say your equity curve, yeah. So
Yeah.
do you tend to find that you make a lot of profit in short? How would I phrase this? In short periods of time over the year, and most of it's flat, or is it fairly consistent profits?
No, I have like big waves and then flat and small decline and then just rapid moves. So I want to have a more slow and consistent equity curve
Yeah,
instead of the bigger swings. But I don't think I can avoid that since my holding time is between 3 weeks and 3 days. And when I take losing trades, they always chip away from the account.
yeah,
And then when I book the one winner, it goes flying.
yeah. No, because I normally find I make most of my profits in probably only 3 or 4 months of the year.
Yeah, same here. I struggled in 2017 with making profits before the summer.
Yeah,
And after the break, everything just clicked and it was utterly insane.
yeah. Because I always think every trader, will go through a long flat period or a period of a little bit of loss and not much profit, and that can last a few months.
Yeah, easily.
And I think that your beginners, when they come into markets, they want to, you see it all about make consistent profits every week, every month.
Yeah.
Forex trading just doesn't work like that, in my view. I think
No,
I think one of the most frustrating things is that sort of waiting, and then you have to stay focused, and then you get your reward, so to speak. In your experience, how long did it really take you to become really confident in what you were doing? I mean, I know all traders, are trying to get better, but when you reach that level of confidence, you think, yeah, I'm going to be making money consistently out of this. How long did that take you?
it took me around 2 years. So it was a long battle, but we made it in the end.
So, in terms of 2 years, a lot of beginners will be thinking, that sounds like a long time.
Yeah, but in the grand scheme of things, I don't think it is because if you take a bachelor degree, that's 3 years. And trading is extremely hard. So when I came into the market, I
Yeah.
always used the 3 year as a benchmark.
Yeah, no, I agree with you because I think a lot of beginners come in the markets, they want to make money too quick. Yeah. They think
Yeah,
they're going to become a good trader within a month or 3 months or something like that. I,
yeah, I
I,
was going to buy Lamborghinis after a month. That was my plan. So,
it took me a good few years. Well, obviously, Hacken, it took him a while as well. Um, so I think, if advice for beginners is, when you come in the markets, like, kind of be patient and understand you've got to learn. Because you actually mentioned that 1,000 hour rule earlier on, yeah?
yeah, they say that the 10,000 hours is
Yeah,
what
sorry,
is needed to
10,000. Yeah, my
be,
apologies.
yeah,
Yeah,
professional or like mastery in a craft
yeah.
takes 10,000 hours.
Yeah, no, I've got some books on this, like research the talent code and so forth, and it's 10,000 hours across anything. Yeah, be it sport, chess. I think it probably applies to forex as well. Become fully competent. Uh,
Yeah, great.
Now, in terms of obviously, how would I put it? Obviously, keeping the right psychology, keeping yourself motivated. How do you like to do that? Do you do reading or anything else? Psychology books, forex
Yeah, I
books.
do some reading. I really enjoy audiobooks. I like to work out just to get my head straight and do things to keep myself motivated. That can be anything for going out with the dog or just playing a game with friends and just keeping the mind off the markets, especially when you have a period of drawdown. That is extremely key and not sit in front of your computer and trying to bang the market since it took money away from me.
um, just out of curiosity, how long per day do you spend up on your forex trading?
I would say on average 3 hours.
Yeah,
So marking out the levels always stay the same, but you want to be here for the news and the London Open and the New York and London overlap, since that is when most of the moves happen. And I see the majority of my fills on my limit orders is during the London New York overlap. So I really pay attention to that session.
okay. And what would be your best advice for any trader coming in the markets?
stay small, since every trader coming into the market have a set amount of money they have set aside for the market. Divide that number by 5 and then go ahead. If you double or make 50% on the first lot, then you add the second one and go further and go so on. But if you, since when they blow up, they don't blow up with all of their money. They have enough for 5 goes.
Yeah, what you're saying there's obviously come in small because you're bound to make mistakes.
Oh yes,
And
horrible mistakes.
and by keeping it small, they're not going to haunt you too much.
No.
So, have you got any trades you're looking at right at this moment?
I have 5 positions on right now. The best looking one is crude oil and gold. So both of them are shorts.
Okay, I'm with you on crude oil. I think that looks a fantastic setup, but I've been wrong on it before.
I have been wrong 2 times before, and now I'm in the third. So third time's the charm. We have the COT, so it's an extreme level. We have a failure above 2015 highs, and it's down almost 2% today.
Yeah, and honestly, I think the risk reward looks really good on it, even though we lost on it before. Yeah, I just feel it could be a really good trade. Well,
I agree.
Well, thank you very much for chatting to me today. We'll
No
obviously
problem.
chat again soon, and we'll chat soon. Thanks again.
Yeah, pleasure to be here.
Okay, cheers, Roy. See you soon.
See you soon.
Thank
Goodbye.
you. I will come back after that interview there with Roy, and I think Roy makes some fantastic points in terms of how to achieve Forex trading success and how to basically get to being a consistently profitable trader, or even maybe trading for a living. Now, in terms of traders who come in the markets, if you're serious about making money, you will go through the right steps. And as Roy correctly points out, it's not a walk in the park, but anyone can achieve success if they want to. So what we're going to do is I'm just going to give you 10 steps to Forex trading success, which you can build a plan around. And if you follow the steps, you will become, in my view, a consistently profitable trader. So let's go and have a look at the steps to achieving consistent profits in Forex trading. Right, let's look at the 10 steps that I believe can lead you to Forex trading success. Now, these are my views, not Roy's, but I think Roy would probably agree with most of them, if not all of them. I haven't asked him, so they're my views on achieving Forex trading success. Now, in terms of point number 1, believe you're going to win from the start. Don't just hope. Most traders who come in the markets, they don't have that deep inner conviction they're going to win. They just hope they're going to win. You need to come in with the attitude, I'm going to win. That's it. If I go through the right process, I will make consistent profits. And to reinforce this and really instill confidence in you, I'd recommend you read some books. Okay, and the first one I put down is read Way of the Turtle by Curtis Faith. It's a fantastic book because it outlines the turtle experiment where Richard Dennis, a very famous trader, decided to show that anyone could achieve trading success if they wanted to. So he taught a group of traders in 2 weeks a strategy, gave them money, and they made him hundreds of millions of dollars. So he proved his point. Now, these people were not all academics. There was, for example, in there a security guard, a female auditor. People from different backgrounds, okay? Now, when you read The Way of the Turtle, you'll actually realise how important psychology is, because all the turtles have said this. Curtis Faith stresses it as well. Strategy, learning the strategy is not hard. It's following it that's difficult, because you've got to have the psychology, you've got to have the discipline. Fantastic book to go and read. Another book that's very good to read in terms of psychology, Trading in the Zone by Mark Douglas, really gives you an insight into why trading is simple, yet so many traders fail. Again, because of mindset, not to do with intelligence or method, okay? Great book, another great book to read, Zurich Axioms by Max Gunther. I love this book. It's wonderful. It's so motivational. Yeah, you can get it very cheaply as well, but it just really gets you in the mood to trade. It's just common sense trading advice. But yeah, when you read it in the book, it's just fantastic. And then I would recommend you read the Market Wizards series. That's Market Wizards, New Market Wizards, and Hedge Fund Market Wizards. Books are edited by Jack Schwager. All the top traders in the world are interviewed by Schwager, and what you'll be struck by is basically how they all stress simplicity in their trading strategies, but also how important psychology is and money management, okay, which I'll come back to in a moment. Now, point number 2, choosing the strategy. Make sure you understand the logic and the method suits you. When I say understand the logic, you need to know why it works, okay, and why at times it won't work, so you can have confidence to follow it through periods of losses, knowing you're going to return to profit. Now, that might sound fairly obvious, but most people who come into trade pick strategies that clearly are not going to win. Let's take the popular ones like Gartley patterns, Fibonacci retracements, Elliott wave. It's all just predictive patterns that only work in hindsight. Now, none of those 3 people I just mentioned, Gartley, Elliott or Fibonacci, made any money trading Forex, okay? So why would you want to use methods based upon that sort of nonsense, okay? You've got to get a method that suits you, okay? Avoid day trading, that doesn't work, okay? Or scalping, I know it's popular online, just doesn't work. You can day trade on occasions, like Roy said earlier on, with non-farm payroll or a really big news event, but try it consistently. Your trading noise you're going to lose. Now, the method must suit you. You can't just follow someone else. For example, Roy will trade in his own way. Okay, I'll trade in my own way. Yeah, we both have similarities in our strategy, but there will be differences as well. We've got something that suits us. So there's many different ways of making money. Now, if you're an impatient trader, don't try long-term trend following. Yeah, trying to follow trends for weeks on end, because that won't suit your personality. Yeah, go for shorter-term trading, like swing trading. If you're really patient, don't have much time, then trend following will suit you. Do some research, and you'll come up with a strategy that you can use, that's simple, you understand, and you can have confidence in. Now, what you want to do when you are refining your strategy is don't just focus on entries. This is what a lot of beginners do. The entry is all important, and they don't realise that the stop is just as important. It's got to give you enough protection, okay? But also it can't be too close, so you get bumped out by noise, and it should never be in an obvious place. You know, where other people group their stops, you get caught in a stop cluster. So when you're working out your strategy, put as much thought into the stop as the entry, okay? Money management, you need good money management. Lots of different ways of trading, but every successful trader will stress money management is the foundation you build a successful strategy on, and it is. And too many traders who come in the markets are too greedy. They want to make money too quickly. They risk too much and they blow up their accounts, okay? Point number 3, demo trading. Only do that for a very short period of time. In my view, 1 week to a month is plenty. I really only find this is going to be useful for getting used to the platform you're using, because there's no money on the line. Most traders will make money in demo trading. It means nothing. Forex trading is a psychological game, and you've got to have capital on the line to feel the experience, okay? Now, as Roy correctly points out, in my view, start with a small amount, okay? You want to feel the experience of dealing with real money, but you want to have money that you can lose, because you're going to make the inevitable mistakes, and you want to build up confidence and familiarity with your strategy. So when you start out, just small capital, okay? Now, point number 4, keep a trading journal. Isolate and correct mistakes. Write down why you took a trade, and basically, when you finish the trade, did you stick to your rules? Did you cut out maybe too early because you panicked and you thought your profit might turn into a loss? Or did you let a loss run, move your stop back? They're obvious errors, okay? Most traders won't correct their mistakes. So basically, if you do, you'll basically speed up your learning curve. Ray Dalio, he is the most successful hedge fund manager in the world, said something which I think is really good. He said, mistakes don't matter. I want my traders to make mistakes. That's the only way they're going to learn. What I won't tolerate is them making the same mistake twice. Now, that might sound kind of obvious, but I know traders traded for years. They'll continually make the same mistake, like over leveraging when they're winning or letting losses run, blowing up their accounts and then starting again. Can't stress it enough. Learn from your mistakes and your learning curve will speed up. Focus on process, not outcomes. What most beginners find very difficult to do. A thing called the outcome bias, that if you get a trade wrong, then a lot of traders look and think, I must have done something wrong. That isn't so in a probability game. Any trade can go wrong so long as you did the right process in terms of your strategy. That is fine. It's essential you focus on process, not outcome, because you're sticking to your strategy, which you believe in, which you've researched. As soon as you start to vary your strategy or override it, you haven't got a strategy anymore. So process over outcome. Do not watch live prices or focus on screen time. A lot of traders sit down at a screen. They think the more time they spend looking at prices, the more opportunities they're going to get, and more money they're going to get. But this doesn't work. All what happens is your emotions get drawn into play. You make impetuous trades. You respond to short-term price action. You might push a stop back or snatch profits early. A normal 9-to-5 job. You get paid for the amount of effort you put in. In Forex trading, that is not so. As the great trader George Soros once said, good trading is boring. If you find it exciting and you're having fun, you're not making any money. Okay? It's not a gambling scenario here we're dealing with when we're trading Forex. You're not going to the casino. You're out to make money, not have a good time trading. The good times come when you've got the money in your account. You can go and spend it. You will reach a stage where you become totally confident in what you're doing, and it's time to increase the account size, okay, to a meaningful amount, okay. I don't mean that you're going to risk money that's going to leave you on the street, but in my view, you should be risking money on trades that will hurt you a little bit if you lose, okay. There's no point in just risking money that you just don't care about, because what's going to happen? You're not going to take good care of it. You're going to lose, okay? It's important to care about your money, okay? So you've got to risk a meaningful amount to make a meaningful amount. That's going to vary between individuals, but if you want to trade Forex for decent profits, you're only starting with a couple of $100. You can do hundreds when you're in your learning curve, but it should be thousands if you're serious about Forex trading, and making it a big proportion of your income, or even a full-time trader. Vary bet size and don't diversify. This, for me, is a fantastic way in terms of basically you'll increase your profits potential and you'll limit your downside risk. If you're dealing in a probability market, you vary bet size. If you're winning, you can step the bet size up. If you're losing, you bring the bet size down. Okay, you don't want to keep a static bet size. Okay, you should read the work of Ed Thorpe, one of the greatest traders of all time, on this. He made a fortune in terms of varying bet size. He goes into it in great detail. Don't diversify. What's the point? Let's say you put on 10 trades, okay, and a lot of traders do that, hoping that their losers will be covered by their winners. But what actually happens is their winners are cancelled out by their losers. They never get anywhere. You basically Just focus on a few trades you really, really believe in. Let's say you've got 4 trades on. Yeah, sure, they can go wrong, but so can 10. Doesn't make any difference. Diversification is basically for people who don't know what they're doing. Okay, and Jim Rogers has said this, Warren Buffett has said it, loads of great traders. You basically focus on a few trades and hit hard. Focus on account management as much as trade management. I'm a firm believer in this. I keep an eye on my individual trades, but I also keep an eye on the overall equity in my account. I think this is a great way in terms of maximizing profits. So my own view is if you get a windfall profit, let's say your account only goes up by 10 or 20% overall, shut down and start again. All traders are going to pick a different amount. But if you do that, you'll clear your head. Okay, because one of the big problems in Forex trading is when you're on a roll and you're making money, you can end up taking too much risk. So I like to do that. Okay, my amount is 10 or 20%, depending on how I'm doing. Also, if I'm losing and I'm losing confidence and I'm just feeling bad, I'll shut down, have a break. Yeah, the Forex markets will be there when I get back in a few days or a week. You just want to clear your head. It's essential to have, in my view, some break from the intensity of Forex trading. Now, maintaining focus and motivation. It's a long journey. And yeah, Forex trading does mess with your head. It's a psychological game. It can be very frustrating and so forth. And yeah, I'm a firm believer. I like to read books. Each week I'll read a book. It can be from one of the great traders or, a great trading book or even a book on psychology or achieving in business. Doesn't matter. Forex is a business, okay? So if you read on great entrepreneurs, for example, you get some great inspiration and motivation from them on how to achieve success. Like Steve Jobs, for example, would be one of my favourites. So I'm always reading. I also like to meditate, which might sound strange, but clears my head. And Ray Dalio, actually, I mentioned earlier, most successful hedge fund manager around at the moment, credits a lot of his success to meditation. You've got to be able to see things that other traders don't see. Keep your emotions out. I find meditation a great way of doing this. Also, what you want to do, Roy was saying he listens to audio books. I do that when I'm in the car as well. It's important that you don't focus on Forex trading too much. He breaks from it, relax and so forth. Now, in terms of these 10 steps, will they work? In my view, yeah, they will. They're simple steps. All you've got to do when you come in, believe in yourself. Don't think it's going to be a walk in the park. Be prepared for the learning curve. Focus on the long term. Focus on doing the right things and correcting mistakes. And you will end up being a consistently profitable Forex trader, in my view. Right, that is the video for today. Thank you very much for watching us. Take care and have a good day.